Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Hey traders, John Howell here, officialjohnhowell.com. Okay, so in this video, markets have crashed. Now what? Let's have a look into this indexes to see what's happening now. Okay, so let's have a quick look at what's happening with the S&P 500 and basically the overall markets in itself. So, firstly, what I want to say is you can see the markets had a decent pullback. Okay, we've really had some spike moves down, big move down. The first thing I do say, guys, is crashes. When the market crashes, it doesn't just go straight down. Okay, we may have 2 or 3 big down days, and then we'll spend a week or so to the upside, and then we'll come back down again, and so on and so forth, right? That's how crashes happen. It doesn't just go straight down. 2008, remember 2008, it took 12 months for it to go down as much as it did. Make sense? So just keep an eye on that whenever you're obviously trading the market. So that's what I do see with the S&P 500. We've actually come down through here, and if I look at the weekly chart, guys, look at the weekly chart, and you can see here that the weekly chart, this trend line here has been completely broken. So let's just delete that off the screen. We do have a bit more of a longer term trend line coming through there. I'm not sure if we do have anything that goes on through here. If I draw the trend line from there and I connect it up through there, then there may be something going on through there. Okay, there may be something. There's a lot of touches through there. So those two trend lines are coming into play. It's almost at that trend line now, and we're almost at this trend line where we are right now. So we are at an area where the market is finding a lot of support. You do have this support and resistance up here as well too. Okay, this is the ultimate support here, but you can see this whole bunch of little support here. You can see it couldn't close below there. So we are at this level where it is right now, give or take, you know, for the next sort of 2%, 2 to 3% on the downside, there's going to run into a lot of areas of support. So when looking on the daily chart here, you can actually see, let me just squeeze this up a little bit. You can actually see on the daily chart that we're actually getting into those areas of support and resistance. You can see where it's held right now. So yes, the market's flushing, and yes, everything's going down a lot, and so on and so forth. And we did bounce off here on the on the S&P 500. Now that you can see that where it's at right now. Let's have a look at the Dow Jones. The Dow Jones, we can see that the market, same thing. If you look at the weekly chart, this is the level, this is the low level here where the market really was, you know, likely to respect. You can see this here was a weekly trend line. That has been completely violated, and it hasn't really respected at all. So let's just delete that off the screen because it doesn't mean anything now at this time. And you can see by looking at this here, we have this low through here, plus also we have this low point through here. That low point through there is also a bit of support level too. You can see, especially on the Dow Jones, right, came all the way down, bounced off this level here, came all the way back up. Now, if I show you, say, a 30-minute chart, you can actually see what happened. They had this bit of a flush down here. That's obviously, you know, margin calls getting happening in the market. Then the market runs back up, pops back down, and then has a bit of rally back up, and then closes at this point where it is right now, holding that level there. So we are holding support levels here. Now, I do see that that's what's happening there on the Dow Jones and the Russell, on Dow Jones SP. Let's have a look at the Russell. Let's see what's happening on the Russell here. So the Russell definitely did throw itself below these support and resistance levels. You can see that it completely left that alone. And so we have a lot of support and resistance levels going on through here. So let me just delete that there. We do have this one through here, but the next support and resistance level is actually around about that point through there. So it's around about that point through there, which is just below that level there. You have that level there plus this level through here. And exactly, you can see like that whole level through there. You can see how it bounced off through there and it had a problems once, twice. As soon as it broke its head above there, it held there. So again, once again, guys, we're at this level now, and we can see how it held up. So even if it does have a bit more of a down day, we're at this whole level of, you know, support levels that's coming into play right now. And you can see on the weekly chart. And so you can see that there, and also look at the Nasdaq. The Nasdaq had a bit of a thumping as well too. Just got completely and utterly hammered. It actually completely broke this weekly trend line here, I was quite surprised by that, but it completely broke this weekly trend line. So let's delete that. Let's delete that. In fact, let's delete everything off the screen now and start from scratch. So we can see that on the weekly chart, we can see what's happening through here. If I draw a trend line from the bottom of 2009, I draw a little trend line up, we can see that's a major trend line that's happening through there. Now, if we have a look at the major support and resistance levels, there is a major support and resistance level down here. Okay, and we also have some support and resistance levels going on through there as well too. Now you can actually see how it's actually, especially the Nasdaq, right? It really bounced off there quite strongly, and you can see how we have a whole bunch of support and resistance levels going on through there as well too. So we are really at an area of support and resistance levels, especially on the daily chart. So I would not be too surprised, guys, based on what I've shown you today. I would not be too surprised to actually see a bit of a rally out of this. Yes, we've had a bit of a rundown, but all the S&P, the Dow Jones, the Russell, and also the Nasdaq, they've all had a decent pullback. So remember, crashes just don't go straight down, okay? And it's really important to understand this. Whenever you're looking at a crash, the market doesn't just do this, okay? It'll go down, it'll have a bit of a crash, and then it might spend a couple of licks to the high side, and then it'll do this, then a couple of licks to the high side, and then it'll do this, and then it might just go sideways for a while, and then it'll do that, you know? That's what a crash is all about. A crash doesn't happen straight away, you know what I mean? So, and, you know, and the reason why I say that is if you look at 2008, the same thing in 2008 back here, if I just bring this up here a bit closer to the 2008 time, you can actually see that the market had a decent pullback, had a 10% pullback, and then we had a little rally to the high side. See that there? Now, here's the thing you need to keep an eye out for. Fibonacci levels are the key, okay? Because if I bring up my Fibonacci tool now, and if I go from the high down through the low, you can actually see how the 50% retracement was holding strong there. It hit it once, rejected there, 50% held there, 50% held there. And if I, let me just bring this up a lot closer so you can have a real good look at this. So you can see what I'm doing here. That 50% retracement there, then it ran down towards the lows, right? So then we use this low point through here. We use this high point up through here. And as you can see, right, ran up. The 50% didn't hold strong, but look what held strong here. The 62% came down, hit support, right? So hit support here again, came up here, hit resistance as well too. And then we started to really break down through here, and that was that elevated move through there. You know what I'm saying? So when you look through there, once again, you have your little retracement tool. You go from this low point through here, and you bring up from a high point. Obviously, we started rejecting a lot there, so that wasn't too much through there. If you start looking at, say, this swing through here, you can see how the market ran up, came up here, gave this low peak, and then ran down through here. So if you actually start measuring this point through here and this latest swing through here, we can actually see, as I said before, this was a 50% retracement and it held from here to here. We had a 60%, the 60% held. Then we had a big run down through here, big run down through there. So that's the only measurement we could think about. It ran up, hit this high through here, and then came back down. And what did it form? It formed a double bottom, right? So when it formed a double bottom, you can see here by looking at the latest, let's actually squeeze this up here. I want to show you this here. You can see here that looking at the latest swing, first thing there's a sign of reversal here. What was that? You can actually see that the first thing we had is a double bottom, right? A bit of a double bottom formation. The second thing, you can actually see that this was the first time, here that it severely started to break the 62, and I also broke the neckline here, which was the double bottom formation here. Okay, as you can see. So that was double formation. It broke the 62%, which was showing complete weakness, because this was the first time, remember, the whole 2008 leading to 2009, that's when it reversed. So the reason why I'm explaining this to you guys is because these are the things that's going to help you understand what is happening in the market. You know what I mean? So if we use that same analogy and that same sort of approach, let's actually bring it back to here now. Let's actually have a look what's happening now. Let's bring this screen over here. We can see we've had this big move down. So if it does retrace, let's have a look go from the high down through the low. And if we do get a retracement, guys, then we do have this whole area, this 50 to 62%, that level through there is going to be a complete and utter resistance level, especially this area through here. So that whole area through there, guys, is going to be a complete resistance level. And that's the level you want to see reject. If it does reject and it struggles through there, and we start to get this side of action, we do, we get a rally up and 1, 2, 3, 4, maybe 5, 2, 3, and then we get a rejection down through here, and then we get a rejection up through there. And then suddenly out of nowhere, we get like a really big breakdown bar like that with really good volume. That's the sign. This is the sign here, okay? This is the sign here that, guess what? We're now likely to really dump down again. That's the sign there. Why do I say that? Because if you go back in history, and if I just delete this off the screen here, if you go back in history, and I'll show you back here in the 2008 levels as well too, you can actually see that that's what happened in 2008, right? You can actually see, we're looking at a weekly chart here, but this is like the formation on the daily chart. But you can see here that this market, this level here was the area of support where it was holding strong, okay? And this level up here is where the market was resisting. It was going sideways, sideways, sideways. It couldn't break it. Then guess what here? Now, if this was a daily chart, this is what I'd be looking to do to get it on an entry, especially if that breakout day, this breakout bar here, was obviously in the underlying direction of the trend. If that breakout bar was there, and also we had really good volume behind it, that to me would be a nice little entry signal, especially when we're having this flowing momentum and things are starting to flow down as well too. Make sense? And so therefore I'd be looking for a pretty decent drop. And you can see here, I went sideways. We had this breakout, this breakout week here. Then look at the next week. From there to there, boom, look what happened. 20% drop. 20% drop. And it's not just on the Nasdaq. If you look at, say, the Dow Jones, you use the same thing back on the Dow Jones. And if I go back here, you can probably see it happens a lot more in the Dow Jones. Let's bring up the Fibonacci levels. Okay, so this high point through to here, that high point through there, look what happened. 62% held. Then it ran down through to here, made this low point. That was the high point up there. Look what happened. 62% held, and then we started the breakdown. Look at this here. Breaking below the lows, went sideways for a while. You can see how this went sideways for a while. So this broke below the low. It didn't follow through. We already had actually quite a significant down move, so that was the reason why that is. You can see here we had this high up here. Look at this here. Really struggled even at the 32%. Struggled. Look at this whole struggling, and look at that down bar there. Okay, this is the weekly chart, by the way. If this is a daily chart, and this is some things you want to keep an eye out for. The market has a bit of a pullback here from this high point up here down through this low point down here, 15%. And then we go sideways. Guess what happened? It's building strength. And now, guys, no matter what you're trading, no matter what you're trying to do, if you're trading a setup, then this is the setup that you want to be looking out for, right? The market's had a big pullback. Do we go sideways for a while? And are we building a lot of strength here? Again, this is for many weeks, right? This is 2008, by the way, right? We had 1, 2, 3, 4, 5, probably several months to the downside, and then we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, probably a good 2 to 3 months worth of sideways movement. And then guess what happened? We had the low point here, low point here, and then we had this breakout here. This was the breakout bar. If that happens there, and that has real good volume, and this is the daily chart, this is exactly what I'm looking for. Because look what happened the next week. Wham! Came all the way down, 22% drop, big drop down. This breakout bar here, especially on the weekly chart, that was showing, hey, hang on, hold on for your horses, because we are getting dumped big time on the markets. Make sense? And then guess what? Market runs down through here. We have a bit of a run down through there. This latest swing high was here. Market ran down. Actually, the market ran down here. Ran down, came back up, rejected out the 32%, then came back down again. Created this low point through here. You can see how that it's probably much harder here, right? So you had probably this high point through here. So this high point through here to that low point there. You can see how the 62% definitely struggled. You can see it broke above there, but came straight back down. And then we had this bit of a rally to the downside. You can see this rally to the downside, right? And again, this is the thing you'll be looking out for as the market's going down. And if you're looking for a turning point, and utilize this in any stocks, utilize this in any trade you're doing, and you can start doing it. If you're doing long-term buy and hold, this is what you want to see in your stock actually trading the markets, right? So you can see the market going down here, sideways. The market comes thump down. Where we are right now, then what happens? You can see how we remember rejecting out the 62. Remember that the market hasn't been able to severely break the 62% in this whole downward movement. Then guess what happens? It starts to really severely break it. And now it's actually, remember, now it's actually broken this level here, right? And now we're keeping an eye for it. And now it's actually starting to reject it here. This was the whole level through here that we can actually see, okay, now we're actually getting a bounce off this level. And this was the first time majorly that it broke the 62. And now it's actually finding support. This here would be a sign that the market is now totally reversing on that whole level there. And then as you can see, that's exactly where things started to really change and really get some momentum behind it and really started to swing behind it. Make sense? So even if you're looking at the daily chart, guys, even if you're looking at the daily chart, the daily swings are going to be there. The daily swings are going to show you. But also, guys, look, keep an eye on the peaks and troughs. Keep an eye on what is actually happening with the peaks and troughs, because it's actually showing you, you know, I've been saying videos for quite some time now that we are likely to get a downward move based on what we're seeing here, right? The S&P didn't do it, but the Dow Jones, what did the Dow Jones do? If you look at the peaks and troughs, right? Look at this here. We had a low peak, we had a low peak, low peak, low trough, low trough, low trough, low peak, low trough, low peak, low trough. You can see the low peaks and then wham, we came down, right? Let's actually look at the next chart here. Look at the Russell here. Okay, what do we have? We had low peak, low peak, low peak, low trough, okay? Low trough, low peak, and then wham. Oh my goodness, market went down. Look at the low peaks, look at the low troughs, right? It's all saying it there, okay? And then also, what do you have here on the Nasdaq? The Nasdaq was saying the same thing too, right? What do we have here? We have this low peak, low peak, low peak, low trough, low trough. It's showing you what's happening. And then what happens? You see it's like, oh my goodness, the market crashed. Well, guess what? The market was actually showing that it was likely to go down even before it went down, right? By reading the peaks and troughs. So anyway, guys, I really hope you enjoyed this video. Have an amazing day, and I'll speak to you soon.